Hey, hello everyone. 今天呢，我要再回头去读这一本 How Buffett Does It. 24 Simple Investing Strategies from the World's Greatest Value Investor by James Pardoe. I read parts of this a few months ago when I first started this channel. I was really practicing at the time, but I feel that I have to go back to it because it's a must read for those of us who are in the banking and finance industry. And as far as writing and reading goes, this is a good example of simple, efficient writing. It's short, it's to the point, it's easy to read. You will see what I mean when we get to it. 我有点不太知道这个应该是 college. Their English is really just college level. But the content is advanced and even some of it is professional. Let me show you the table of contents here. I think last time I read chapter 1, but I'm going to do chapter 3 today, maintain proper temperament. I would like to do chapter 6, look for a company that is a franchise. I like to do chapter 9, and I think I would do 11 also. So that's 4 episodes already? Yeah, so I think I will definitely spend the next 3 to 4 episodes going over certain chapters in this book. 那么这本是我的书，我刚刚有把生字先画出来一点点。I am going to go over these words first. 那么当我在读的时候，我就不停了哈。Steeliness steeliness 的意思就是非常就是钢铁一样的意志，钢铁一样的性格，不轻易动摇。Poise 也是一样的意思哈，就是很镇定，很沉稳。那么这些我认为这个字都很简单呢，但是我还是和你们说一下，以备万一。Precipitous 就好像掉到深渊一样，悬崖掉到悬崖里面。Confronted 需要面对。Macro 你们都知道什么是 macro， 这是大经济，宏观经济。Doom and gloom 就是状况变得非常糟糕，一切都很悲观。Speculative 非常就是非常这个不是很扎实的，就是已经很投机了。其他的frenzy internet frenzy 就是已经发疯了，疯狂的。Unglued 这个字很容易懂哈，就都拆散了，东西都散了。Rebound 反弹，好像就没有什么生字了。所以这个 every chapter 刚刚好，都差不多就是8到9分钟吧。Okay, here we go. Chapter 3. Maintain proper temperament. Let other people overreact to the market. Buffett advises, keep your head when others do not, and you will profit. Although it is simple and easy to understand, Warren Buffett's investment philosophy is not necessarily easy to practice. Once you have armed yourself with an understanding of Buffett's approach, the next most important thing to develop is the proper temperament for a sound investor. Proper temperament means keeping your head at all times. It means having the right state of mind when you have to deal with the inevitable bad news and setbacks that affect your stock holdings. Steeliness and poise are required when things go south. A proper temperament also means keeping your head at the other extreme. When the stock market is soaring and people all around you are being greedy and euphoric. Your temperament will come into play when things do not go your way. What will you do when confronted with a precipitous drop of a stock you own? Will you panic and sell your shares? What will you do in the face of a significant political or macroeconomic event, such as a war, a recession, or a big decline in the Dow Jones average? What will you do if the company you have stock in has an inevitable bad quarter or year? Are you going to be fixated on the daily price of the share, or instead focus on long-term business fundamentals and results? What will be your reaction when a Wall Street expert predicts doom and gloom for your stock or for the stock market in general? What will you do when the investment community is in the midst of a bear or bull market, permeated with either speculative enthusiasm or depression, and gripped by either fear or euphoric greed, as was the case during the internet bubble? Bill Graham, Buffett's professor at Columbia, once said, "The investor's chief problem, even his worst enemy, is likely to be himself." Will you be your own worst enemy? Your reaction and response to these developments will play a tremendous role in determining your investment success. The wise investor remains calm in the face of negative events. Will you dump your shares when the prices fall, or will you instead look to take advantage of a potential opportunity and buy more shares when they go on sale? Buffett has a clear yardstick that you should apply to yourself. If you are someone who is likely to come unglued when one of your holdings loses half of its value overnight, you shouldn't be in the stock market in the first place. You need to have the skill to invest in fine companies and then the confidence to stick with them when others do not. It almost never makes sense to sell a good company, says Buffett, when there's fear in the air. Don't own any stock that would cause you to panic and dump your shares if the price falls by 50%. 那个就是它的规则哈。Berkshire Hathaway experienced its worst year ever in 1999, while the Nasdaq was reaching new highs during the internet frenzy of the late 1990s. Buffett's outmoded style of patient investing in low-tech companies was deemed obsolete. His refusal to buy hot, high-tech stocks made him irrelevant, or so said the experts. Value investing was a dinosaur, and day trading was all the rage. Consequently, in March 2000, the price of Berkshire Hathaway A shares fell by 50% to $40,000 a share, from a previous high of $84,000 a share. Although the underlying business was still solid and its future secure, nervous shareholders dumped their Berkshire Hathaway shares. They were acting on emotion as a storm was battering Berkshire Hathaway, and they jumped off the ship instead of tethering themselves to it more tightly. What does the Buffett approach mean? It means seeing a 50% drop in share price as a buying opportunity. It means keeping your eye on the fundamentals of the business in which you are invested, rather than on the swings of a fickle market. If investors had heeded this advice and purchased Berkshire when its stock price dropped by 50%, they would have been richly rewarded when the stock price rebounded in 2004. skyrocketing to $97,000 a share. Yes, it's all too easy to lose your cool in the midst of a hot stock market. It's even harder to stay calm when prices are plummeting and experts and magazine covers promise doom and gloom. In fact, the easiest thing to do in the latter case is to panic. Don't. When you own stock in a great business, keep it. If someone wants to sell you more at a bargain basement price, buy it. When Buffett was about 22 years old, he had accumulated about 350 shares of Geico insurance that were worth about $15,000. He then decided to sell all those shares. It turns out that if he had held on to those shares, they would have been worth about $1.3 million 20 years later. Through this experience and others, Buffett learned the hard way about selling his piece of a company that he had already identified as a wonderful business. He later remedied this mistake by buying major positions in Geico in 1976 and by buying the entire company in 1996. Here are 3 pieces of advice that will help you during good times and bad. Hold on to great businesses. Do not be taken in by the stampede mentality, whether toward or away from the market. Buy great companies and hold them for years. Do not dart in and out of stocks. Research shows that the more investing one does, the more money one is likely to lose. Plus, there are all those extra commissions you'll be paying. Stampede 就是狂奔啊，一群鸟、一群牛、一群马，狂奔逃命。Dart in and out 就是杀进杀出、飞进飞出。Dart 就是一个飞镖。Dart in and out 就是叙述一个人快进快出的意思。Know yourself. Don't buy a stock if you cannot stomach it losing half its value. This means having the patience and the discipline to hold on to companies with sound management and fundamentals. Never make an investment decision because others tell you to. Develop a 10-ear to hot stock tips, talking heads, and others who may have a vested interest in a certain stock position. Do your homework and think for yourself. To succeed in the market, says Buffett, you need only ordinary intelligence. But in addition, you need a kind of temperament that can help you ride out the storms and stick to your long-term plans. If you can stay cool while others around you are panicking, you can prevail. Prevail 就是最终获胜，就是最终还是赢了。Okay, this is chapter 3. I will see you next time for chapter 6. Sorry, that was chapter 3. Okay, later.